Hello, good morning, ladies and gentlemen. How are you all doing this morning? I hope we are ready for the new trading session for today. I'm excited to be here this morning with you guys as we want to be doing a follow-up detail on the analysis on the pairs we have been monitoring since the beginning of the week. And as usual, we are going to be looking at how well these pairs are doing before making a decision for today. So once again, you are welcome as we dive into the current market structure. Now, the first commodity we are going to be looking at this morning is the US oil. And in fact, the US oil, since in the last 24 hours, though we have a sell position running, and if you'd remember vividly during our live session yesterday, we were at a situation where price action was trading around the $77.50 level, somewhere around here. This was where we were during the live session yesterday. And one thing we observed was the fact that price was doing a consolidation phase between the $77.80 level and the $77.20 area. And we were anticipating a possible reversal pattern or a trend continuation pattern based on that current structure. And if you remember vividly, we have been selling the US oil for quite a while, and considering the fact that price action has been bearish since the beginning of this week somewhat, there was a high chance that we might likely see a breakdown of that support line at the $77.20 level. And one thing I stated here yesterday is that we want to be selling or adding more position, whichever case that may be, had the breakdown of the $77.20 level, which actually happened during the New York session yesterday. So we had a position triggered below the structure. Has price action moved about how many pips is that? About 50 pips currently running in profit at this point. And for those who have been part of this trade, well done to you for being on standby to have caught that move. And as we head into the UK and New York session today, what is going to be our plans from this current market structure? Well, based on what we have here and considering the fact that price has been bearish for at least for this week, remember we identified this bearish trend line after connecting the series of lower highs here. Remember we had the bearish trend line figured out during the live session yesterday, and though we had the breakout at one point here, and you can see what happened a couple of days ago, we saw how price action dropped below the trend line one more time, and since then price has been trading below the trend line to further emphasize the strength of the sellers at this particular point in time. And if we look at the current structure here, I would like to zoom in so that we can see things more clearly here. You will see that the trend line has consistently rejected all attempts by the buyers to break out of that structure. And we might likely see this trend continue like that. And one thing we are going to be doing first of all is to understand that the trend line here will be one of the yardstick for our trading activities for today. So what this simply means is that if price action continues to trade below the trend line, we shall be comfortable in our sell position. And that reminds me, for those who had already sold the US oil, remember we have two positions. We had the first position triggered here a couple of days ago at the $77.50. Then we also had a sell position triggered here below the $77.20 yesterday. So the most appropriate thing to do right now is to secure this current position, and I will be suggesting that anywhere around the $77.20 level seems most appropriate to secure this current position, as we need to give room for price action to breed. Now that we are going into the UK and New York session today, what is going to be our plan? What are we expecting from this current market structure? Are we buying? Are we anticipating a bullish momentum, or are we going to be getting ready to join or add more position to our existing trade? So with that question in mind, I was able to identify the simple setup here on the 1 hour time frame, and you can see something that happened here. Since price tested the $76.40 level during the later part of the New York session yesterday, we saw how price action fell into a consolidation phase, which has a higher low here. And when we connected the series of higher low, we simply have a temporary bullish trend line. I'm calling it a temporary bullish trend line because of the fact that we are on a long-term bearish momentum at this point. So with the bullish trend line figured out here after connecting the series of lower highs, so coupled with the bearish trend line we identified earlier, we shall be including this bullish trend line into the parameters we are going to be using to guide trading activity for today. So if price action continues in such a way that it breaks down the $76.50 level, and as you can see, that breakdown also indicates that price action has broken down that bullish trend line. So if this happens, then we might be getting ready for another wave of bearish momentum. So how do we do this? So for me at this point, I will be suggesting that anywhere below the $76.50 area seems most appropriate to place our sell stop order in order to join that trend continuation to the downside. And if price action continues in such a way that it does a further breakdown of the $76 level, then selling pressure below the structure will definitely welcome additional position. So you can see the simulation I just illustrated here falls just within the ambit of that bearish trend line. So what I'm simply saying is, as long as price remain below the bearish trend line, we shall feel comfortable in the sell position that we are in right now. And in as much as we continue to look out for selling opportunities, you all know that it's very important that we keep our mind open for the contrary to happen, because anything could actually happen in the market, and we always want to get ourselves prepared so that whenever the situation happens, we are not going to be caught in a dilemma of not knowing what to do. So despite the fact that we are looking out for selling opportunities in this market, we cannot ignore the possibilities that buyers might likely come in this market. And because of this expectation, we want to also be including the possibilities of a buy potential in this market. Now, what do we want to be looking forward to if price action reverses? That is, we might likely have a momentum shift. What are we going to be looking out for so that we can join that momentum to the upside? Well, before I go into that details, I want us to quickly have a look at the 4 hours time frame so that we can have an holistic perspective of what is really going on in this market. Now, when we scale up a little bit into the 4 hours time frame, so I will just zoom into what has been happening here in the last 4 weeks, I guess, so that we can use this as a tool to identify the expectations we are looking forward to here. Now, a couple of weeks ago, we saw our price action broke out of this bearish trend line, and we were lucky enough to take advantage of this trading opportunity a couple of weeks ago as we rode the move all the way up into this area. And right now we can see our price action broke down the $77.50 level at the beginning of this week, a level which also shares a beautiful confluence with that bullish trend line that we identified at the beginning of this week. Now, with that kind of situation here where price action broke down that $77.50 level, which also shares a confluence with that bullish trend line, from a technical standpoint, there is a likelihood that price action could come back and do a retest of that structure. It could be the retest of the $77.50 or probably the bullish in this market. What do we want to be seeing? Well, for us to be buying, we want to see price action break out of that trend line here to give us a signal that the trend line may no longer have the capacity to continue to hold that bearish momentum. And if a breakout of that trend line happens, we are going to be seeing this as a counter trend opportunity where there is a likelihood that price might come back to do the retest of that structure before another wave of bearish momentum will happen. So in that case, this is more or less a counter trend opportunity if a breakout of this trend line happen. So if you are a scalper and you are a counter trend trader, you might want to take advantage of this opportunity, as we have a potential of about 80 to 100 pips thereabouts to catch here if price action moves in that direction. But if you are not a scalper, you don't feel comfortable taking a counter trend opportunity, then I would advise you to stay out of this trade and wait to be at or stay at the bus stop here around the $77.50 level and the $78 area, looking out for selling opportunities here, which might come in as a reversal pattern in the form of probably a double top structure or a head and shoulder pattern to incite that trend continuation to the downside. So this is what we are going to be looking out for. Then I said this, that if price action continues to the upside and leads into a situation where price climbs back above that bullish trend line, then definitely we want to be seeing that as a signal of a bullish momentum to the upside. But if selling pressure resumes below the structure, then it will be an opportunity to anticipate another wave of bearish momentum from this point. So let's scale back down to our 1 hour time frame with the information we've had here, and I will go back into that current structure. So let's zoom in. Okay, so this is what we have here right now. Since we are going to be anticipating a bullish momentum if price action ever breaks out of that trend line, we have a structure here at around the $77 area approximately. Let me bring my line chart here so that we can have a specific point of connection. Okay, we have this area at the $76.80, which we can look out for buying opportunity if we do have a breakout retest of that structure. So hold on a second, please. Let's just extend this out a little bit so that we can see things clearly here. So now that we have the situation here, all right, $76.80, I guess. All right, so we have the $76.80 level. Now what we are going to be looking out for to buy is to wait for a breakout of the structure to happen. Then immediately we scale down to our lower time frame, look out for a retest of structure, which probably would line up with this temporary bullish trend line we just identified here. By pressure resume above the structure, then we could join that bullish momentum to the upside. Then if a further breakout of the $77.20 level happens, we will definitely be adding more position and we'll continue to ride the move all the way up to the upside here. So this is what we are going to be looking out for to buy the US oil for today. So I hope that we'll be on standby so that we can catch that opportunity when it finally happens. Remember, we have a sell stop order below the $76.50 level to join the trend continuation. And for those who are already in the sell position here, we have moved our stop loss to somewhere right around the $77.20 area to secure this current position. So let's see what happens in the next couple of hours, and be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update in that regard. If you have questions, feel free to drop your inquiries in the comment section as I move on to the next pair. So the next pair we are going to be looking at today is the GBPUSD. And in fact, the GBPUSD has been quite choppy anyway since in the last 36 hours here, and this was following the impulsive move that we were lucky enough to be part of a couple of days ago. And if I zoom this out, you can see what I'm talking about. Following this impulsive move to the downside, we saw that as soon as price got into the 1.18100 level, we have been witnessing a choppy situation here, which further emphasizes the indecision in this market. It has been quite choppy in this market so far. But during the live session yesterday, we had the structure identified. That is, we had the beautiful channel situated where the resistance point of the channel falls at around the 1.18400 level, and then the support line of the channel sitting at the 1.1800 area. Now, you all know what we look out for whenever we have this kind of situation in this market. We look out for a breakout of this channel to give us a trading opportunity. It could be a breakout of the channel to the upside to trigger a buy position, with the hopes that price action will continue to the upside. And if price action breaks down the channel, then this will be triggering a sell position here. Now, with the situation of things that happened during the New York session yesterday, remember we had the ADP employment change, which came in at a positive variance. Let's quickly look at that. So we saw this is the economic calendar here. And this, okay, during the New York session yesterday, we saw the ADP employment change figure come in with 242,000, which is quite positive here. It was beyond expectation. As we can see, expectations was around 200,000, and we had a positive variance of 0.67, which is a positive news for the dollar. However, the market reacted with volatility here, as we saw a situation where price continued to juxtapose between the resistance and support line, shaking out a lot of people in this market. In fact, I was also shaking out of this trade here, and I laid emphasis on the fact on my TradingView platform that we want to allow the market to normalize before we want to be looking out for any trading opportunity. Then with the situation we have here, price action normalized about after 4 hours after, and we saw the breakout of the 1.184 again, retest of structure to signal another buy position in this market. And as you can see, price action has been trading to the upside. Then during the early hours of today, I updated this chart on my TradingView platform where I identified the structure at the 1.18500 level, where I said we want to be looking out for another buy opportunity to join that rally to the upside. And let me show you where that is. So okay, so we had this figured out today.
Comment.
Okay, so today's morning, let me just scroll down to, all right, so this is this morning. So I said buying pressure resumes as the bullish trend line here will be our yardstick for trading opportunities for today. So what this simply means is that the bullish trend line we identified yesterday, remember we had this bullish trend line figured out after connecting the series of higher lows here, which buttresses some level of bullish momentum in this market. So we are going to be using this bullish trend line today as well to guide our trading activity. And you know what I mean by that. Once price action remains above that bullish trend line, we want to feel comfortable in our buy position. So if this situation goes on like this, you want to have your buy stop order above the 1.18500 with the hopes that price action will continue to the upside. Now, talking about the buy position we are expected to happen in this market, remember I told you yesterday that if this buy position continues, then we want to be seeing it as a counter trend opportunity. Remember, we witnessed a strong bearish impulsive move a couple of days ago, which broke down structures like the 1.19100 level and this bearish trend line. And you know, from a technical standpoint, whenever we have a breakdown of a structure, we expect that one point in time price is likely going to come back to do a retest of that structure, where selling pressure resumes below that level, will incite another wave of bearish momentum. And with the consolidation phase we have been witnessing here in the last 36 to 48 hours now, we might likely be seeing this bullish momentum triggering, which has already triggered already. We might likely see price action move into the structure around the 1.191 area, which I will be suggesting our TP target should be situated. and between the 1.191 and the 1.193 area seems most appropriate at this point. So let's ensure that as we continue to guide this bullish momentum to the upside, considering the fact that it's a counter trend opportunity, we want to be moving our stop loss accordingly to secure this current position. But rest assured that I will be giving you an update in the comment section on my TradingView platform if there are any surprises in this market. Now, with the situation we have here, we're looking out for bullish momentum. We cannot ignore the fact that sellers are still very strong in this market, that the possibilities of a selling momentum could likely come in this market. And if that's going to happen, what do we want to be seeing so that we can be part of that move when it finally comes in? Well, with the kind of situation we have here, like I said, we want to be using this bullish trend line as a yardstick for trading activity for today. And so what this simply means is if that is at any point in time price action breaches that bullish trend line, that is a breakdown of that structure happens, then this will definitely be a bearish signal. But remember, we are not going to get too excited to join right away, so we are not having a sell stop order right away, as we need some further confirmations to give us that leverage that the sellers have finally come into this market. So after the breakdown of that structure happens, we want to remain patient, scale down to a much lower time frame. It could be your 15 minutes, your 10 minutes, your 5 minutes time frame. Look out for selling pressure below that trend line, something like a retest of structure, to further confirm that sellers are gradually gaining some momentum in this market. So we want to see some selling pressure. Then if that happens, then you want to have your sell stop order below the 1.18400 level to trigger a sell position in this market. And then if a further breakdown of the 1.18100 level happens, we shall be adding more position to our existing trade. So this is what we want to be seeing in this current market for us to be selling the GBPUSD for today. So let's have this in mind. Let's keep our options open. We have a buy position running at this point. Looking forward to more opportunities at the breakout of the 1.1850, but we shouldn't forget that sellers are very strong in this market. We recently just concluded an impulsive move to the downside, and we also want to keep in mind that sellers might likely take over this market. So we look out for that breakdown retest of that bullish trend line to give us that leverage to join that decline to the downside. If you have questions or you need me to make clarifications in any aspect of whatever I've explained so far, feel free to drop your inquiries in the comment section. So I will be moving on to the next pair, which is going to be the XAUUSD. That is the gold. And on the gold also, we have been witnessing the same situation with what we have been witnessing on the GBPUSD. Remember, we are on the profitable side on the XAUUSD, as we were lucky enough to be part of this bearish momentum that took over the market after the breakdown of that bullish trend line at the 1848 level. And since then, price action dropped significantly into the structure here at the 1810. And since price tested this area, we can see our price has been caught within a consolidation phase just within the 1820 and the 1810. Now, to further buttress the importance of this current structure, that is the trading below the 1820, I would like to share some key try to share some key structures on the 4 hours time frame, which I laid emphasis on at the beginning of the week. Now, look at the 4 hours time frame here and look at that $1,820 price level. You will see how that level had been a major determinant of price action. And one thing about that structure is that this was where price action started here. So the bullish momentum we have been witnessing this year started at exactly the $1,820 level. This was on the first day of the month of January. We saw the breakout of that 1820, and since then price action has been trading to the upside. And in the last couple of weeks, we saw our price action is back into that $1,820 level a level which was initially at the beginning of this year a strong demand zone. Now, if we go to as far back as the second half of last year, I think I would have to scale up a little into the daily time frame so that we can see things more clearly here. So let me quickly go into the daily time frame so that we can run this with a better perspective. Okay, so this is the daily time frame here, and the second half of last year we saw just right below the 1820, which is the key level we are using to guide trading activity for this week. You can see how this below the 1820 level has been a strong selling niche in this market. So throughout the second half of last year, we saw how that level has been negating all attempt by the buyers to break out of that structure. And not until the beginning of this year, we saw the final breakout of that structure, which triggered the bullish momentum we had this year. And with the situation of things right now, price action is back into the 1820 level, and in fact is right trading below that structure. And you all know the importance of that structure. Below the 1820 has been a strong selling niche, so it has a strong selling memory in this market. And there is a likelihood that if selling pressure continues below the structure, we might likely see a breakdown of the 1800 level to further incite a sell-off in this market. However, if price action climbs back above the 1820, we might be having a bullish momentum in that regard. So these are the things we are going to be looking forward to, and so I will be scaling down to the lower time frame now to see how price action has been reacting to this area to decide how we want to be trading the XAUUSD for today. So right back to the 1 hour time frame. Hold on a second. Let's do this quickly. So we are right back at the 1 hour time frame, and like I said earlier, this is what we were able to identify yesterday as price action is still trading within that structure. So that is the 1820 level, that important structure we identified on the daily time frame. And look at this channel we have here. It's a $5 range between the 1815 and 1810. Now look at the situation we have here. We have a low here at the 1810. Price is yet to break down this previous structure, which is a clue that there is a gradual bullish momentum coming in behind the scenes. So we have a higher low, price unable to break the previous low. We have the 1815, which will be serving as the neckline of this potential reversal pattern, after which price action breaking out of the 1815 will trigger a buy position for us. Then we should be having our stop loss somewhere close to the $1810 level to secure the scoring or minimize the risk that we are going to be putting in on the trade. And with the situation of things right now, price action appears to be trading in the positive territory for us, as we already have the breakout of the 1815. Since yesterday anyways, we have been in this position as we saw the breakout of the 1815 here yesterday, and price action has been trading within that range. So for the XAUUSD today, it's looking a little bit bullish for us here, so we continue to look out for bullish momentum as long as price remains above the 1815. And to identify a trend line that we want to be using to guide trading activity, connecting the series of higher lows here, we have this trend line, which we shall be calling a temporary one in the meantime because of the strong bearish momentum we have in this market. So we continue to look out for buying opportunity as long as price remain above both the bullish trend line and the 1815 level. Stop loss be around the 1810 level, and let's see how far this bullish momentum will go. And if this leads to a further breakout of the $1820 level, like I said on the daily time frame, this would be a beautiful opportunity to add more position to our existing trade. And if we cite a breakout of the 1820, then if I take a zoom out into this current structure, we will see a situation where price action will have transitioned into a strong reversal pattern in the form of a double bottom structure. So the breakout of the $1,820 level will be triggering another buy position in this market, and we shall be looking forward to see how far this bullish momentum will go. So for those who are already in this buy position here, as soon as price gets into the 1,820 level here, kindly move your stop loss to your entry point, secure the current position, and let's wait out to see how price action will be reacting to this level to decide if we are going to be adding more position or probably getting ready to join a decline. But be rest assured that I will be jumping in the comment section on my TradingView platform to give an update whenever price gets into that structure. Now, in as much as we continue to look out for buying opportunity, I always try to ensure that we have both perspective in line so that whenever the contrary happens, we are not caught in a dilemma of not knowing what to do. Now, with the kind of situation we have here and considering the strong bearish momentum that started this week, we cannot ignore the possibility that sellers might likely take over this market. And if sellers are going to take over this market, then the whole structure we have here could turn out to be a trend continuation pattern. And if that is going to be the case, what do we want to be looking out for to join that decline to the downside? What do we want to see on this chart to ensure and give us the confidence to be opening a sell position in this market? Now, the bullish trend line we identified earlier will continue to guide our trading activity for today. So what we would simply want to see for us to be able to be thinking of selling the XAUUSD is to see a breach of this bullish trend line. So we want to see price action break down that bullish trend line to give us that signal that we might be going bearish on this one. But one thing about the breakdown is that we don't want to be jumping in right away by having our sell stop order below that structure, as we need some further confirmation that will guide that trading opportunity. And this will definitely come in the form of a retest of structure. It could be the retest of the trend line, the retest of the 1,815, or perhaps the retest of the $1,813.50 level. But the most important structure we want to be seeing is a reversal pattern around that area, selling pressure on our lower time frame. Then we could join that decline to the downside. Then a further breakdown of the 1,810 level will give us a beautiful confirmation of adding more position to our existing trade. In fact, the breakdown of the 1,810 level has a high chance of inciting a huge massive move to the downside in that regard. So let's be on standby. Let's keep our mind open and follow me on my TradingView platform so that you can be part of the daily commentaries I normally share in the comment section. So that is that on the XAUUSD. If you have questions, feel free to drop your enquiries in the comment section. So the last pair we are going to be taking for today is the USDJPY. Now on the USDJPY, we already have a sell position triggered. I shared this during the early hours of today. I told you that we are going to be selling below the 136.800 level. Let's quickly look at the update on the USDJPY publication on my TradingView platform. Okay, so this is the USDJPY, and this was what I shared during the early hours of today. Okay, so we are still going to run through how yesterday went by, but I just quickly want to inform you how okay, so this is the position I identified this morning. We had the bearish trend line. I identified a new structure at the 136.800 where a breakdown retest of that structure should be triggering a sell position for us. And with the look of things right now, price action, we saw the retest of the structure, price action triggered that sell position right now. And if you are taking advantage of that move, kudos to you, as you will currently be running with about 60 pips in profit. Now, what was our expectation yesterday? What were we looking out for during the live session yesterday on this chart? Now, if you look at this situation here, this is where we were during the live session after taking advantage of a bullish momentum after the breakout of the 136.00 level and the 136.200 area. Remember, we had two positions running. Then we had another position here before price action got into our TP target around this area. Then during the live session yesterday, we identified a simple structure here after noticing how the bullish momentum appears to be diminishing at this point. So we connected a series of higher lows to give us that bullish trend line, which you can see on your screen right now. And we said this bullish trend line will be guiding our trading activity for yesterday. That if price action continues to trade above the bullish trend line, we shall be looking out for buying opportunity, with the hopes that a breakout of the 138.00 level above here will be welcoming additional position. And I also said that if price action breaks down that bullish trend line, it will be a beautiful signal that we are going to be having a momentum shift. And this was exactly what happened yesterday. We saw the breakdown of the 137.500 level, which also shares a confluence with the bullish trend line, and we saw our price action drop to the downside. I also shared this on my public platform. As soon as it triggered, we moved our stop loss accordingly, and in fact price action moved about 100 pips in that direction before we started seeing this bullish momentum come in. And at this point, a price action takes us out from where we have moved our stop loss to. And during the later part of yesterday's trading session, following the ADP employment change, we saw some volatility in the market, and I told us all to wait out for normality to come into this market. And we had a position above the 137.200 area where we were looking out for buying opportunity to push price to the upside. But one interesting thing happened here. We saw selling pressure resume again, hereby giving us a confirmation of this bearish trend line. Now, with the situation we have here, price action takes out the buy position. Now things are looking more bearish at this particular point in time. And I think I deleted it. We had a buy zone area around this area yesterday, which we identified after taking into consideration this impulsive move to the upside by using our Fibonacci retracement tool. And we identified the area between our golden zone area, which is always within the 50 and the 78.6%, which happens to be where price is still trading within right now. So let's quickly identify that back again. So between the 50 and the 78.6% was an area we identified yesterday, and we said this is going to be a TP target zone for sellers, and we also identified this as a potential buy zone. Hold on a second. Potential buy zone. All right, so we want to place this inside the box, and then we give this a yellow color for the sake of clarity. All right, so we identified this yesterday. I told us that we want to be joining that decline to the downside. Then we should be having our TP target sitting somewhere around the 136.00 level and the 136.700. And with the situation of things right now, and with this candle here, I'm of the opinion that price action might break down the 136.00 area. Now, the importance of the 136.00 area needs to be emphasized here. Now look at this area. At the beginning of the week, remember we had this resistant level around the 136.00 level, which was broken a couple of days ago to the upside. And you all know that from a technical standpoint, whenever we have a breakout of structure, there is always a likelihood that price action will come back to do a retest of that structure in anticipation of another wave of bullish momentum. So at this situation here, we are still within a potential buy zone right now, but the most important thing we want to be looking forward to within the zone is a reversal pattern. So it could come in the form of a double bottom structure, something like this, breakout retest of the neckline to incite another wave of bullish momentum. It could come in form of a head and shoulder pattern, whichever case it may be. We want to be anticipating a buy position from this level. So if you have your TP target for the sell position at the 136.00 level, it's okay. But for some people, we could extend it a little further into the demand zone here, after which the demand zone around the 135.800 area You can have it around that area. Then one thing you will do here is that as soon as price gets into the 136.00 level, you want to be moving your stop loss to secure this current sell position here. Then wait out and see how price action will be reacting to the 136.00 level to determine if we are going to be adding more position. That is, breakdown retest will welcome additional sell position here. And if price action continue to find buy pressure above the 136.00 level, that is, we start seeing multiple rejection of the 136.00 level here, then definitely it will be a beautiful opportunity to anticipate this second wave of the bullish momentum. But rest assured, I'll be jumping in the comment section. So let's see how this is going to be playing out. For the sell position we have right now, move your stop loss accordingly, secure the current sell position, and let's wait and see how price action will be reacting to the zone to determine if we are going to be adding more sell position or we want to be getting ready to buy the USDJPY for today. So that is what we are going to be doing for today, and on this note, I want to be calling it a day here on the morning live session. So I hope to see you in the comment section on my TradingView platform as we continue to monitor price action. So I wish you all best of luck during the New York and the UK session today, and do have a wonderful evening, everyone. And thank you for being around. See you tomorrow, same time. Bye bye.